Hey guys, good morning, everybody. Happy Monday. Today is Monday, August 1st. It is the first of the month, 6:19 right now. Market's going to open in about 10 minutes. So I will set up this room real quick, then we'll get started with our session for today. One thing to keep in mind, the first of the month is typically a risky day because it's when the new contracts open for the options market. Also, it's NFP, so typical things that we look out for. But we'll still take some trades if we see anything good, but we just got to be a bit cautious. So let me just get this set up real quick, and then we can get started with our session for this morning. So a couple more things here to update. It's good. It's good. All right, solid. Everything looks good here. So let me get this link sent out to you guys here in the premium. And then we can get started with our session for today. All right, solid. All right, looks good. I'll give it a few minutes for people to make their way in, and then we can get started with our analysis shortly.
Service agent, we will be happy to help. We expect to begin boarding soon. For those of you who would like to enjoy our personal device-centered
All right, so as people make their way in, I'm just going to put up the requirements for the breakout right here. And I'm also going to put up my confluences so we can start analyzing real quick.
Oh my god, didn't it? Wait.
Before the market.
Wait, if you can hear me. I'm not gonna do it. Watch this.
Okay, baby.
Someone's got their mic on. Let me mute everybody.
Fucking nigger.
There we go. Thanks guys for the heads up. Typically it's off, but I don't know how it got taken off. Thanks guys. Morning everybody. So good morning everybody. Today is Monday, August 1st. So happy Monday everybody, and happy first of the month. It is 6:23 right now. Market's going to open in about 7 minutes. So just keep in mind, with it being the first of the month, guys, this is typically a bit of a risky day because the new option contracts open. So although we're not trading options, it does affect our analysis and the way that the market moves. So just keep that in mind. And also it's NFP week. So I'll be looking for trades per usual, but if it looks, a bit too crazy on open, then we might want to just wait for maybe the daily entry on the 1 minute, or maybe the daily on the 3 minute. So just keep a heads up, because I don't know how the market will move today. If it moves smooth, great. If it doesn't, we'll just be a bit cautious, but we never really know until it happens. So just got to be on the more cautious side. So let's see who else is here. Morning Kenny, morning Karen, morning Jennifer, morning C-Sook, morning Maddie, morning Jason, morning Rashida. Morning, Alexander. Morning, Fahad. Morning, Stephen. Morning, David. Morning, everybody. So, all right, I put up the breakout right here, and the confluence is at 6:24 right now. Market's going to open in about 6 minutes. So I'm going to go ahead and analyze the bias real quick. Bias right now, I believe, is bullish. The reason why I anticipate it to be bullish is because retail sentiment is 63% short. So this indicates that 63% of retail traders are currently selling right now, you know that majority of people do not do well in trading. So you don't want to do what everybody else is doing. You want to do the opposite. So with 63% of retail traders selling right now, I'm expecting price to go up. I can see price is dropping right now, as you guys can tell, obviously, but I do expect it to swing right back up during the New York session. So our current bias is going to be bullish. Looking over here at the fundamentals, I know obviously they're down right now because price is dropping. So it makes it a bit of a neutral push because this right here is indicating a sell. This right here is indicating a buy, right? But I think overall I'm going to be looking for a buy here. So I'll put slightly bullish for the overall bias. But if the fundamentals change on open, then it's going to be just bullish. Looking at the trend right now, the trend's obviously bearish, as you guys can tell. Price is below the pivots. The pivot, red pivot is over the green pivot. So this indicates that it's bearish. Also looking at the trend meter down here, it is also red. So we're going to say that the current trend is bearish, which can change usually on market open. So we'll see what happens when the market does actually open. But currently right now, it is bearish. Looking for high-low continuation. There's a high-low continuation here. So for the sell, yes. Buy, no. Or actually, no, the buy is a yes too. We have a high-low continuation coming down right here. And we also have a high-low continuation from down here as well. So yeah, I mean, we have a high-low continuation both ways. So depending on where the trade's coming from, looks like we have it. Let me take a look at the high-low candle reversal. So in order to have this here for a sell, we need the high to be red, right? So right here, it's green. That doesn't fit for a sell. So I'm going to put this over here. Sell, no. And buy no either, because the lower here is, or just no in general. Buy no, because the low would have to be a green candle. So there's no high-low candle reversal right there. Lastly, we'll look for additional candle confluence or strategy confluence. We don't have to look right now because, you know, when the market opens, it's going to be a bit different. But looking right here, we have a V3. So we do have a confluence for a sell. And then also over here, we have a V3 as well for a buy. So we'll just say yes for now, but we'll have to, you know, check that out when the market actually opens. So let's see who else is here. Morning, Marlon. Morning, Surin. Morning, everybody. Market is going to open in about 3 minutes, guys. So we looked at our confluences already. We have currently a slightly bullish overall bias. We have a bearish trend. There's a high-low continuation from both directions. High-low candle reversal is not present for either direction. And the additional strategy confluence is present for both directions. So we'll see what happens when the market opens. But looking at this here, so if we're looking for a buy, I'm just going to, you know, quickly go through the confluences. If we're looking for a buy, then trend doesn't match. High-low continuation is cool. This is cool. So there's three confluences right here for a buy. If and so we were looking to take a buy, right? So if we get a buy from breakout, we can possibly take it. It should be fine. Looking for a sell, we currently, it's the same thing. So we can technically take the breakout in either direction. Overall, you know, obviously I would want to take a buy if it does come up, but if it comes up for a sell, it's perfectly fine as well. If we have a buy though, it looks like the high-low continuation is no longer going to be there because this one is overlapping with this one. It would have to keep pushing up. However, market's going to open in about 2 minutes. So we'll see what happens when it opens. If it doesn't, you know, we'll still look for entries for the daily counter trend. If you guys are new and you guys are not familiar with that, I'll try to go over it before it happens. But if it happens like last minute, I'll mark it up and you guys can follow along. But it's cool. If you guys are new here, just, you know, follow along and then you'll start to see, because we apply the same strategies every day. Basically, I'm focusing on just the breakout 3-minute counter trend daily and 1-minute counter trend daily. But other than that, we'll see. Yeah, Maddie said if it's 50-50, he's going to sit it out, which, you know, makes sense, Maddie, because it is a bit of a risky entry here with it being first of the month and whatnot. So High-low continuation is going to be a no for a buy. So it's basically going to be 50-50 for a buy. But if we get that 1 minute daily, it's going to be for a buy as well. Yeah, Brian said might see that double bottom like Friday. Yeah, we can see that too. I agree, Brian. All right, guys, market is now open, or it should be. Yeah, market is now open. So we're looking for a strong red candle in order for us to take a sell here. And the reason for that is because momentum's a sell right here. So we already have the momentum for a sell right here. So if we get a strong red candle, that would be the breakout. Looking over here at the confluences, that would fit for the confluences here. But for a buy, if this closes with a strong green candle right here, this is going to be the breakout for a buy right here. So one thing to be careful for is going to be the session. So you might want to trail your stop, or if anything, you just let it run. But we need this to close with a buy signal. In order to take this, it needs to be a buy signal. So let's see if it closes. This right here is a little iffy because it has a wick on top. I'll wait for it to pull down a little bit, maybe take it as it pushes back up higher. So I'll let it pull back a little bit and retrace. And then if it comes back up, then maybe we'll take the entry there. Because, I mean, it's technically the breakout. But there's like somewhat of a wick right there. But this would be the breakout here, guys. So I'm in the position now. Let's see, because it did push up. Let me go over the confluences real quick. Or it doesn't really matter, we're already in this breakout. So overall, the only problem with this entry here is, obvious reasons the confluences aren't like heavily there, but the bias is still bullish. So let me take a look at the, what was I looking at? Looking at the, let's see, sentiment over here. Sentiment is 63% short. Looking over at the fundamentals. Fundamentals are currently bearish right now. 141 points in the red. But as I mentioned, it was just a bit of a risky move because the confluences weren't there. But as I mentioned, we're going to be following these entries here, and we're just going to document them as we continue along. So if it hits stop loss, it's stop loss. If it continues on, it continues on. You can see right here, it is pulling back a little bit. This is kind of what I was expecting and why I was waiting for it to pull back a little bit. I wanted to pull back and then come back up and take it, but I just entered it anyways. So if it hits my stop loss, it's cool. Yeah, I hit my stop loss, unfortunately. So this is cool. This breakout for today is going to count as a loss. And this is basically the main trades I'm looking for. I'm looking for the breakout. And then after this, we're going to look for the daily. So this daily over here won't hit either. Or actually, this would have been no, because the trend meter here is opposite. So the breakout for today is a loss. We're going to look for the 3-minute daily now. So looking for this here. Actually, no, this isn't going to be because it needs to be a counter trend. So in order for us to take the daily on the 3-minute, this needs to be a buy signal. And looking over here on the 1, so I wouldn't be surprised if it comes back up. I'm going to watch it as it swings back up. Maybe I'll make another entry as it comes back up. But this is kind of what I was worried about. This candle here was kind of big, and I wanted it to pull back a little bit before I made the entry, but I entered it right then and there, which is all good. It happens. And I'm just going to keep taking the breakouts this week to see how it pushes through. Did you take it, Maddie? I'm not sure if you took it. I took it. Unfortunately, I took the L, but it's all good. Let's see if it swings back up though. So overall, I do think it's going to swing back up. Let me check CNBC to see if there's anything here that came out this morning. Gotcha. So Maddie took it, but he put the stop in profit immediately. Yeah, for me, I'm just gonna let the trades run, guys, because like I've been using the trailing stop, and I've been getting cut short like for the past couple breakouts. So it's all good. You guys saw the results from last week. So last week we had, what was it? Last week we had the breakout, full TP on Monday, full TP on Tuesday, loss on Thursday, no trade on Wednesday, and then full TP on Friday. So I'm okay, you know, with the win rate. I'm gonna eat the loss whenever it happens, but when we have the other entries, I'm going to gonna just let them run. So I'm not going to be using the trailing stop for a while, just because I need to let the trades run. Because on Monday and Tuesday, I use the trailing stop right here. I only locked in like partial profit. So partial profit for Monday, partial profit for Tuesday, Thursday loss, and then Friday win. So I did end up in profit at the end of the week. But if I let these trades run, I would have been heavily in profit, right? Instead of just partials for Monday and Tuesday. And you can see prices coming back up. It's typical. I'm expecting it to swing back up eventually, but it happens. So just manipulation on open over here, which is a common occurrence. So I'm going to put this over here just to be transparent with you guys, because I want to make sure that you guys are understanding the strategy here. So I'll put the this right here. Let's see, stop loss hit for today's breakout entry. Where's the stop sign at? And we barely hit the stop loss, so it's hard to, I don't usually put a symbol for that. I'll just copy it from up here. All right, but I'm still looking for the I'm still looking for the daily entry on the 3. So we can probably still get that. That if I take that, that'll pretty much cover the loss on this one. So just give you guys a little update right there for that. Move this over here. So I'll still follow it along. Let me check the 3-minute over here. I should probably set an alert for this here. So we'll set an alert for the once per bar, signal fired. 3-minute K2 momentum. So we'll come back to it. Have the alert set up here. If we have an alert here, but we need to have a buy signal. So I'm looking for a possible invalid sell or something. Right? I mean, I don't think that really work, Maddie, because we just need to get a buy signal for this. We already have the buy signal here, counter trend. So I don't think we'll have a daily here for the 3-minute. We'll have an actual daily, but not a counter trend. For the 1-minute over here, there's no entry here as well, because we already have the buy signal off this one. Gotcha. Okay. Yeah. Thanks, Maddie, for confirming it. So in order for us to take the counter trend trade, we would need price to push up, because we need the trend meter here to be green, right? So this right here would be the actual daily entry. So let me take this off. This right here would be the actual daily entry, the sell signal. But in order for us to have that counter trend, this would have to be opposite of the trend meter down here. So the only way we can get a daily entry for the 1-minute or a 3-minute, or not necessarily the daily entry, but the counter trend daily, we need price to push up so that we can get the trend meter here down to be green. And then if we do get a sell signal, that would fit the requirements. But since that's not going to happen here, or it's not likely to happen, we're not going to have it. And there's a sell signal right there. So this would possibly be the daily if you're taking the regular daily for the 3-minute, but I personally wouldn't take it, because I expect price to push back up. You can see it's now pushing up right here, because I think overall it's going to push up. I think this right here was just, obviously clear manipulation. This candle here was just way too big. So you guys can see here that this candle here was a large red candle. Let me just mark up this right here. And I see the correction back to the upside. So you guys can kind of see how big this candle was. Price kind of pushed below, basically to spike people out, basically us who are taking the buys here, basically spike us out. And then I expect it to come back up for the correction. And then once it breaks and closes above here, then I'm expecting a continuation back to the upside. That's basically what I see. And the reason why I see that is because sentiment is present right here. So as long as it stays above 60%, then I'm expecting price to continue pushing up higher. That's just overall bias. So, right, this is short term. And then long term, I expect it to push back up because majority of people aren't selling right here. So with all these people selling, you can see prices now starting to push up. The main issues here that it needs to get past is going to be the sessions. Once it gets past the sessions, key price is going to be right above here, where that candle was, and then it'll just continue pushing up higher. So you guys can see right here, price is starting to push up. So unfortunately for that breakout, it was just unlucky because you can see price now pushing back up. We'll follow it, and then I'll draw it to show you guys. This is why typically I try to wait for it to pull back a little bit, but either way, I mean, if it pulled back this way, we would have just avoided it altogether. We have a pending signal over here for the 3-minute. Looks like it's pushing up here. Let's see how far it pushes up if this ends up closing. This might be the catalyst that it's going to reverse back to the upside. So I'll follow it. There's a couple of confluences here that I see indicating that it's going to swing back up. Main thing is going to be this low over here as a green candle. This is a reversal pattern indicating that, you know, it's probably going to push up. So if this buy signal here closes, I think it's going to continue pushing up higher and just correct back up. So we'll see how this here closes. There you go. So there goes that pattern, not really a pattern, but basically what I was showing. So you can see right here, the thing that I marked up. If this candle here closes above, then I'm expecting it to push up higher and pretty much just continue pushing up. So for the breakout this morning, I know we took the breakout over here. And, you know, we did enter a little too early on this because I didn't show you guys that I was going to wait for it to pull back. I got kind of excited and I entered right away. And then I just took it. But you can see price here is coming right back up. It's just manipulation on open here, stopped out, and then now it's pushing back up because this is where it's supposed to be. It's supposed to be pushing up from this point overall. The only reason I know that is because the sentiment here is still 62% short. So I'm expecting it to push up higher. We just got to wait for that there to close. And it closed above. Now we just got to wait for it. It might come back for the retrace, or it might just continue pushing up. Well, there's a couple of different scenarios that can play out here. Price might come down for the retrace, or for the retest, which looks like this candle here is testing it with that wick. And then it might just continue to push up even higher. Let's see, E's asking, isn't the counter trend 3-minute running? So it isn't, because it would have to be the first signal on open. So this first signal on open would be this red candle right here, E. So unfortunately, that wouldn't be the counter trend, because this one right here would have been the first signal. If this here didn't come up and we had a buy signal, then yeah, this would be the counter trend. Yeah, I know. I mean, that would have been solid if this here wasn't the signal. Yeah, Maddie said price is going up. Yeah, this pattern here confirmed it. So we had the reversal pattern right here, the low with the green candle, followed by a buy signal. Plus, it's just going the direction of the bias. So we'll see where it goes right here. Yeah, no, I can see it pushing up to there too. Maddie's anticipating it to push up to the sessions right here, which is what I see happening as well. So see where that goes. There, and it continues to push up. I think we have news coming up shortly as well. So just something to keep in mind. If you guys are taking any entries here. So let me check the news. I think news is coming up right here at 6:45, right? We have news right here, final manufacturing PMI, and we have news at 7. So 6:45, 7. I'm gonna mark those two up right here. This would be the news candle. 6:45 and 7. Doesn't look like much is happening off that news candle. So it looks like prices are retracing a little bit. Let's see. I think that's about it. Is there any other news today? I don't think so. All right. All right. Well, I try to take a buy here. Well, I did take a buy here. I try to cover my loss for that for the breakout earlier because I'm expecting it to push back up. So I actually took a buy here as price pushed up, and then I moved my stop loss in profit. I only locked in 490, unfortunately. I was hoping that it was going to push all the way up. There was news right here, so I was expecting, some sort of kickback. But as price pushed back up over here, I tried to make another entry because everything here kind of aligned for price to push up. As price pushed up to here, I moved my stop loss in profit. I only locked in 490, so I didn't cover much of my loss. Well, I mean, I covered some of the loss from that breakout, but not enough. I was hoping it'd spike up and then hit the full TP here so that I can cover that loss from earlier, basically break even for the day. But here we go, as price comes back down. I got to hold off on like following into these moves here because I was trying to, write it back up. E's asking, what are you risking per trade? I'm risking 2%, E. So it wasn't too bad. 2% loss off the breakout. I was going to try to catch it back up right here as it pushed back up. I actually entered here off the 3. So when we had this right here, this close, because I had the pattern right here, lock in. We had the low with the green candle, followed by a momentum signal to the upside. I entered the buy right here, actually. So I had a pretty good entry point. And then what happened was, it was a solid entry point. As price pushed up, I moved my stop loss in profit to this point right here. Just slightly in profit. And then with that news candle, like I wouldn't be surprised if it pushes up. I'm not going to re-enter though, because I don't want to FOMO into this move, but we had news at 6:45. Price obviously just dropped a little bit, spiked me out in profit, and then now it's probably going to continue back up. So this is where I actually made the entry. So if you guys listened to my analysis earlier, I saw this pattern. I was like, okay, this is probably going to push up. I lined it up with the basically late entry for the breakout. So say, for example, we didn't enter right away, and I basically listened to my own advice where I said to wait for it to pull back a little bit. I would have made the entry right here, right? So either way, it would have been the same entry that would have taken if I didn't enter over here, where I ended up getting caught in that manipulation. But I ended up getting stopped out again here in profit because price pushed up. We had news right here. I want to mark up the news candle, but it's all good. I just got to eat that loss for today and then bounce back tomorrow. So I'll keep following this right here. This is basically the late entry. I'm not in this position anymore though. So basically, if you waited for it to pull back as we were anticipating, you would have made the entry right here because price would have pulled back and then it would have corrected back up right here for the breakout where it's supposed to go. I'm expecting it to push up higher, just like Maddie said. I'm expecting it to push up at least to the sessions over here. But it is a risky move, obviously, because you can see right here, price is now consolidating. Question from Steven. Steven is asking, should I just call it a day? Yeah, Steve, you should just call it a day. So for you, you should be taking just the same stuff I'm taking. You should be taking the breakout and the daily on the 1 minute and 3 minute for counter trend. All of those trades are done for already, Steven. So you can just call it a day, come back tomorrow, and then you'll bounce back because the win rate for the strategy is very high, which is okay to eat the losses as long as you're using proper risk. So as long as you guys use maybe a 1 to 2% risk per trade, you guys should have no problem, because if you guys follow the trades from last week, so let me just show you, and it just becomes a numbers game at this point, right? It becomes a numbers game because, so looking at the trades from last week, if you just let them all run, so first trade here was a win, right? So you have a 2% gain, plus Tuesday was a 2% gain. Thursday was a loss, so subtract that by 2%. And then Friday we had 2 wins over here, so that's a 4% plus 4%. You'd have a 6% gain for the week if you follow the trades full and through last week. So for this week we have a loss on Monday, so we're currently starting the week at a negative 2%. If we win tomorrow, 2%. X amount of trades. If we win 2 trades tomorrow, say the daily and the breakout, that's going to be a 4% gain. We'll now be in 2% profit, or net profit, I guess, percentage wise. So yeah, Stephen, if you should just call it a day. For me personally, that's what I think you should do. Don't FOMO into these trades, Stephen, because I know you like to FOMO into these trades, especially when you see it here into the profit. I do expect this to hit TP, but I'm not going to FOMO into it myself. I already tried to FOMO into it right here for a late entry. I moved my stop loss in profit. It kicked me out. That's probably a sign that, this is probably not going to be a smooth move. So I'm just going to let it be. I'll come back with with my entries tomorrow. But I do expect it to push up. I just don't think it's going to be like a smooth push up. Well, obviously it wasn't. Price pushed up right here, came back for the retest, and then continuation back to the upside. Let me scroll up real quick. I want to make sure I'm not missing any other questions over here. Let me scroll up. So if you guys put a question up earlier and I missed it, just put your question in the chat again. I'm scrolling up, but I don't see anything else here. So let me just scroll down real quick. Madhu's question is, are those low high above the session areas of liquidity? Are those low high above? See, and it hit TP. Damn it. If I didn't get stopped out right here when it pulled, or not stopped out in profit, I would have hit my full TP right here. So analysis played out perfect, guys. So you guys can see right here, we just got caught. It was just unlucky for the breakout. The breakout over here, I should have just listened to myself, and I should have waited for it to pull back, because this is what I was worried about, that it was going to pull back and then it was going to swing back up. If I would have listened to myself and just waited and been a bit more careful, like I was kind of warning everybody to, if we entered over here, it would have hit full TP. It was just manipulation on open. It's all good. It happens. But yeah, you guys can see right here that typically the first of the month, at the end of the month are like risky days. So like today, this was risky because it's 1st of August, new options contracts open. It's also NFP week. Price just got manipulated down and then it swung back up. So if we would have waited, we would have entered right here, we would have had our full TP, but it's all good. I'm still counting this as a loss. I also didn't get my coverage on the late entry over here that I tried to take, which would have been nice. This would have just covered my loss if it played out, but it's all good. Anyways, there we go. So here's the actual push, right? And let me go back to the 3 minute over here. It played out perfect. So whenever you guys see this pattern over here with the momentum signal, basically you're looking for a low with the green candle followed by momentum. It pushes it perfectly. So if I would have just not moved my stop loss and profit, which I probably shouldn't have done, I should have just left it alone. It was just me being careful. It would have hit my full TP right here. The only problem is I moved it up as it came back right here to break even. It pulled me out. But you guys can see this pattern, right? Same with right here. See, we have a sell signal. The high here is a red candle. So use the high low. Look at the most recent high. It's a red candle. It's followed by a red momentum. Look what happened. big push to the downside. Same thing down here, high low with the green candle followed by momentum, push back to the upside. So this is what I was hoping was going to happen. No retracement right here, but it's all good. You live and you learn. Anyways, I think that's it for right now. If you guys have any other questions, feel free to put your questions in the chat. I'm going to go and answer some questions right now. If there's anything else you guys want me to cover, if you guys want me to go in depth on like any of the strategies or anything like that, just let me know. As I mentioned, I'm not taking any more of the scalps right now for the 1 minute, because I don't want you guys to be taking risky trades. I want you guys to be consistent with just following through with basically these one-on-one strategies, the breakout, the daily 1 minute, daily 3 minute counter trend, just to help you guys have that consistency. Because you guys can take a lot of these scalps here. As you guys can see, there were scalps here that came up, but I don't recommend beginners take them. If you guys are good with the scalps, go ahead and take the trades. But if you guys are not familiar with it and you guys are not comfortable taking them on your own, then I recommend just sticking to the daily 1 minute or the 1 minute daily counter trend, 3 minute daily counter trend, and the breakout. Because this will basically guarantee that you'll pass your, I don't want to say guarantee, but it's basically going to make it impossible for you not to pass your challenge if you just take these trades. So yeah, Fahad said news again in 5, don't FOMO. Yeah, there's news coming up right here, guys. So don't chase this move right here. This is probably going to retrace down a little bit. Let me clean it up a little bit over here. Or here, I'll just give you guys the the update in the group, just so that you guys can see the if you guys want to go and analyze this later, because I know a lot of you guys like to analyze this later for the late entry. And if you guys want to come back and watch, I'll just give you guys a little markup right here. So it's covered in the live breakout. Breakout would have played out if we waited for the retracement. Just looking at his laws, but just posting this for review. All right, so I just want to give you guys the markup right here. We're still counting today's loss, obviously, but this will give you guys the breakdown. Seth over here said, considering his NFP had a bit larger stop loss on the breakout, just cashed out early. Nice. So Seth here still held on to the breakout. So he took the breakout that we took earlier. He just had a wider stop loss because it's NFP. He understood, the risk with today's market. And then he made a pretty big win right here. Total profit of 8,412. Nice work, Seth. So yeah, Seth understood the risk here with that. And he played out big if you, use a bit of a wider stop loss. Just looking over here, let me see how much farther would it need to be. I mean, it's pretty risky because this thing spiked down like about 830 pips. So yeah, stop loss would have to be maybe double 1,000 and it would have saved it, but it's all good. All right, let's move on to the questions because we do have a couple questions here. Let me see what people are asking real quick. Some more profits here from Ross. Nice work, Ross. Ross over here locked in a total profit of 6,660. So solid work right there, Ross, with your profits. And here, I'm going to post up my losses to you guys just to be completely transparent with you guys. I want to show you guys that losses happen. I know I don't lose very often, but when I do lose, I just eat the loss and I move on. So let me just take a screenshot of my losses right here and my small recovery. It's okay to lose, guys. Just keep that in mind, because I feel like because you guys see that I almost never lose, you guys think that it's like when you do lose, it's like the end of the world. It's not the end of the world. So let me just post my losses right there. So there goes my loss right here, guys. Just showing you guys that it does happen. Hit my loss right there. I lost 5,000. It's 2% loss. It looks like a big loss because of the number, but it's only a 2% loss for me because I'm on a 200K account. So just don't focus on the number here. Focus on the percentage, guys. I don't ever focus on the number. Losses will happen as long as you're like within your parameters. If you guys are trading FTMO, MFF, any funding company, you can lose 5% in a day. So I basically lost like half of that or less than half of that. So this isn't really a big loss for me. It's just regular loss, because if I have a win, it's going to be a $5,000 win. So with that said, this is my loss. This is my trade here that I tried to catch on the way back up. Unfortunately, moved my stop loss in profit, and then it locked it out. John's asking me, is your account 400K? No, it's 200K. I haven't merged my accounts. I have 2 accounts with FTMO. So I have 2 200K accounts. I haven't merged them because I'm not comfortable with trading the bigger account yet. Once I'm comfortable, I'll merge them. But right now I'm fine with the 200K and just copying them over. So let me just show you guys. Lost today on breakout. This, keep it at this, and bounce back tomorrow. All right, here's the news candle right here with that red, and it is now pushing up. There goes that big news candle right there. Markup news price right here. Let's see, question from East asking, how come FTMO hasn't scaled your account yet? I don't know, it's weird. I was wondering that as well. I think it might have been because at some point where I know this is what happened before. So what happened before, not recently, but like a while back, I merged my accounts to 400K, and then I split them back to 200K, and they didn't scale my account either. I think what happens is when you merge your accounts and then you split them up, it starts the timer over again. It was like 6 months before. I don't know if it's changed. The first time that I merged my accounts, their requirement was like 6 months consistency. And then I don't know if it's lowered, because I know you said E here, it's 3 to 4 months now. Maybe they've made it shorter. I got to message them. I don't know if they do it automatically. I think you have to actually message them and be like, hey, I've been consistent for X amount of months, and then they will upgrade. They'll pretty much scale your account. So I got to ask them about that. But from my experience, or from in the past, that's what they told me, because I merged my accounts to 400K, and then I just didn't feel comfortable. So I asked them to bring it back down, or split them back into two accounts. And they said, oh, because you did that, you have to like start the timer over. Because I guess like each account has like, it has like its own lifespan, because they give you a new account. Like when you do a 400K, they give you a brand new account, basically like a new login. So yeah, that's a good question though. I should probably ask them. Maybe they can just do that for me. I mean, it would make a difference. I'm not really going to increase lot size, because I think the increase with your scaling is like, it's not a big increase. So I'd probably stick to 10 lots either way, but it would give me some cushion just in case. Let's see, Seth said, you guys take care. I better get off before he FOMOs into a bad trade on NFP week. So yeah, guys, just keep in mind, it's still NFP week. So nothing's changed. It's still a risky week in general because NFP. The thing with NFP is that it typically is really good or it's really bad. So be a bit conservative with your trades. Don't FOMO into anything. Like for this, for example, don't chase this buy up here because it's overextended. Price is pushed up quite a bit. So price is pushed up from down here up to this point, 2,120 pips. So this might have to retrace down a little bit. He's asking, are you still in your MFF challenges? Yeah, I'm still in it, because the first couple of trades were I took like partial profit, and then we took that loss E. So it ended up bringing me back to break even. So my MFF challenges are still around break even point, because I wasn't holding the trades to full TP for the first entries. So yeah, if you guys are not familiar with like what happened to my MFFs, I ended up trading gold with you guys like a couple of weeks ago, and it screwed up my accounts because the lot sizes were different. And then it ended up violating all of my MFF accounts. So I'm starting the MFF challenges back. And then I took the first breakout. I think that was a loss. The second couple breakouts were like partial profits because I was using the trailing stop. So it didn't really give me enough profit to bring it back. And then Friday, I think we won. and then it brought it back to like break even-ish. So, and then today's loss. So I'm back at like, I'm just around the break even point. So yeah, for MFF, I'm still in the challenges, unfortunately, until I get those accounts back. The only accounts that I have funded right now are going to be my FTMOs. And it happens, right? People lose accounts all the time, guys. Like, I feel like whenever people lose their accounts for MFF or FTMO or whatever, they think that's like the end of their trading career. It happens, guys. You guys have to just take the losses and roll with it. You'll bounce back as long as you stay consistent. Just don't turn into a gambler and then you take these like super risky trades. It's all about discipline and consistency. Let me scroll up real quick. Yeah, Seth said, good job on handling losses so well, Sean. Take care all. Yeah, definitely, Seth. So we'll see you back here tomorrow morning. That's really the key, guys. Like when you guys take losses, you can't let it affect you. When you take wins, you can't let that affect you either. Like, you can't get too excited just because you won one trade, because you could lose the next trade. And then same with you losing one trade. You don't have to get all sad after losing one trade, because you'll just bounce back on the next trade. As long as your win rate is high and you're taking proper risks, you'll recover from it. So let me scroll up real quick. Let me see what else I'm missing. Over here, scrolling back up. Sorry, Madhu, I'm going to get back to your question. You said, are those LH above? Sorry, Madhu, I was like confused with your question earlier. You were asking, are those LH above the session areas of liquidity? So are you asking if they were liquidity? This area right here. This here was liquidity though. So let me see, your question came up at 6:45, Madhu. So your question was right over here. I think you were asking if these here were areas of liquidity, right? If that was your question, then yes, that is correct. So Madhu earlier was asking if this was liquidity, I believe. And it was, because you can see the areas here are so strong, right? So we had liquidity sitting right there. As price came up and hit it, it did hit liquidity at that point, and that's where it pretty much skyrocketed up. So it hit this area of liquidity, pushed up to this next area of liquidity, and there we go with the bullish push. So as you guys can see from the analysis this morning, we were anticipating the bullish push, and it played out. Unfortunately for the breakout, we just got in a little too early. Happens. Pretty much stopped us out, and then I pushed back up. I was trying to recover on my second trade over here. You can see I made my 650. I was trying to just cover it and then make another 5,000 and bring it back to break even. But unfortunately, it pulled back and stopped me on profit. If this didn't happen right here, this little pullback, then obviously would have hit my full TP, but unfortunately it didn't. It's all good. But yeah, Madhu. So that was the area of liquidity that you were asking about over here. Let me go over here real quick and see what else we have with the questions. So if you guys have any other questions, feel free to put your questions in the chat. As for my trading, I'm done trading for the day off my own accounts, but I will answer whatever questions you guys have if there's anything that you guys want me to cover. Scrolling up. So let's see, other question over here. Sorry, I'm gonna scroll up, guys. There's a lot of questions here. Let me scroll down slowly. Question from Deswell. So Deswell was asking, what was the stop loss on the breakout? Stop loss on the breakout was, it's on the screenshot over here. Stop loss for the breakout was 32,682. So that was a stop loss on the original breakout, like for the just 1-in-1 strategy right there. That was it for that one. If you want to see it, Deswell, just go to the picture over here. Click on this. You'll see the red number right here. This would be the stop loss for the breakout, the actual breakout. Scrolling down further, Albert's asking, is there a time frame for the 3-minute? So for the 3-minute, it's just the first entry, Albert. I mean, the first momentum signal. So this right here didn't count. Let me show you the one from yesterday. You're basically just looking for the first momentum signal. It typically happens like within the first couple minutes. So this was the breakout from, or not the breakout, the daily from yesterday. So for the 3-minute daily right here, this is the strategy that we were looking for. We're basically looking for a counter trend trade. Market on Friday, or not yesterday. Yesterday was Sunday. This was from Friday. Market open here at 6:30, right? So you're just looking for the first momentum signal. But you do want to catch it before, I guess the cutoff is 8 because we get off the live session at 8. If you want to keep looking for it, you can, but I mean, I guess basically the cutoff is going to be 8 o'clock because I'm not going to be on the live following it. But this is what we were looking for. Market open here at 6:30. We're looking for the first momentum signal. Momentum signal here was for a sell. It doesn't have to be valid. It just has to be momentum that's against the trend. Trend meter here is green. So this right here would have been what we were looking for, but the opposite. Since the trend meter was red, we were looking for a buy signal, right? Which we didn't have. So right there, this is the one that we took on Friday. And that's the one that we made profit off that day. So I think my profit's right here. That was a trade that we took, made 3,050 off this one right here. So there's no timeline, but I mean, I guess you cut off at 8 o'clock because that's when I'm off the live and we wouldn't be able to follow it. I guess you can push back to maybe like 8:30 or 9, but typically that signal will come up before then. Let's see. Ross said more. I'm not using trailing stop right now either. Nice, Ross. Yeah, I mean, we just gotta let the trades run, right? If it hits stop loss or TP, great. But yeah, the trailing stop is really hindering, you know, the full profits that we can cash if we just actually hold on to it. Let's see. Question from Seth. Seth said, from what I've noticed, is that right before open, the market creates a low. That's when the market opens. It likes to retest on the red candle. If the plan buys to go long, you can wait for the market to get as close to the low as created and take it for a long ride. Yeah, no, and I agree with you too, Seth. That's kind of what I saw here with the 3. So on the 3-minute over here, market opened over here and then it at 6:30 and it provided a reversal pattern, right? The low with the green candle. So this is what Seth was looking for. He just waits for that low to be established or high to be established, depending on what bias. The low right here is established, and it was followed by a buy signal right here, which pretty much skyrocketed price all the way up. Push of about 2,000 pips. 1 second, guys. Felt like I needed to sneeze. Never mind. Take that back. All right, so let me scroll down further. Yeah, same with Seth's analysis for the opposite direction. I agree. Karen's asking, would you take a 10-minute daily considering it is lining up with our bias? So, sorry guys, I got allergies right now. 1 second. All right. So I wouldn't personally take the 10-minute right here, Karen. And the reason why I wouldn't take it is because this candle here is too big. It's going to have to retrace up, or not just the candle, but the push up that's already happened right here is overextended, right? Where it's pushed up so high. So what I would do is I wouldn't take the daily like just yet. I would probably wait for it because it's going to have to retrace a little bit. Basically what happened with our breakout here. This basically you'll just mark it up from this low because you want to anticipate a retracement, right? If price is pushed up that high and it's overextended, you want to anticipate the retracement back down. So price has already pushed up 2,960 pips with no retracement yet. So if you do get a break, the 10-minute daily, this would basically be the range that you're looking for. You want to wait for it to retrace back a little bit because there's no retracement. So you can see, let me see if there's any other dailies here that came up. So this was the daily on the 29th. I don't know what the 29th was, but this over here pushed up, came back down for the retracement, and then it continued on its way back up higher, right? So let me see if this here. So basically the same situation right here, right? Price pushed up a little bit because this was the daily on the 29th. Market opened here at 6:30. First valid signal was right here. It lined up with the trend meter. So everything pretty much lined up, perfect daily entry. Price pushed up, it retraced down a little bit, and then it came back up. So the thing is, if you enter right here, you'd be in profit and then it came back down. So if you move your stop loss in profit, you'd be fine. But if you just waited for it to pull back over here and then just made the late entry at this point, you would have pretty much just rode it all the way up with no drawdown. So this is just me being careful, Karen. So if you want to take the daily, I mean, feel free. I'd probably take it with a smaller lot size, just, you know, to be on the safer side, because there's going to be a retracement. But if you do take it, I would probably just let it close. If and when it closes at that point, let it retrace down a little bit, because it's going to have to retrace down, and then make a late entry as it comes back up. So in order for this to close, it needs to be a valid bullish signal, right? So that's another thing to look for. But I would probably wait for it to retrace. If it closes, let it retrace a little bit, because it looks like there's a high getting established right here. And then just make that late entry as it swings back up. So that's what I would do personally, just because we already saw what happened with the breakout earlier. You know, being patient and waiting for it to retrace is probably going to be the best move under these circumstances. Looks like volatility is dying down too. So if this candle here closes super small, it might just range for a little bit before it even makes any move. So yeah, if that closes there, we'll come back and look at it. It still has 4 minutes left on the candle. If it closes, we'll see if it ends up pushing up or if it retraces down a little bit. So next question over here. From Albert. Albert's asking if this 3 minute was valid. So let me go over here to this 3 minute. All right. So Albert's asking if this right here is a valid. No, this wouldn't be valid right here, Albert, because this wouldn't be the first momentum signal. But this is what I was looking at, because it gave me a reversal pattern. So going back to the 3 minute over here, this is Albert's question. He was asking if this here was a valid 3 minute daily. It wouldn't be, because for the you'd have to take the first momentum signal, which should be this one right here, this red one. But we wouldn't have taken this because we're doing the counter trend, right? So like basically we want this to be opposite. We basically wanted this to be the candle for our entry, but this one came before, so we would have just skipped it. The only reason I took this for a buy here is because we had the reversal pattern. We had the low here with the green candle, followed by momentum, and then it pushed up. Same with the other example over here. You have the high low over here with a red candle. So this is the basically the confirmation. You have momentum here because you already know momentum's pushing. This here would be the confirmation of the reversal. High with the red candle, red momentum sell, push to the downside, right? Trying to see if we can find another one here. Another example. It doesn't always come up, but when it does come up, it typically pushes pretty heavily. There's no buy signal there. It usually has to happen like right after, or like within the first couple candles. So like, for example, right here, another high. I'll just go back to here. This reversal pattern here is a high with a red candle followed by a momentum sell. And we would have anticipated to drop. It took some time, but eventually it did drop below, right? So it's just a pattern that we see pretty often, and that's why I would have taken it. But I didn't take it because of the daily. I only took it because I saw the correction here. Our bias was already bullish, and then I had that pattern there indicating the reversal. So that's why I took it. But that wasn't the 3 minute daily. Let me scroll down real quick and see what else I'm missing. Question from John. John's asking, how come you took that second risky trade when you already lost 5K from the first one? If that lost, wouldn't you have lost your funded account? No, it's only 2%. You can lose 5%. But for this trade here, I took it with a smaller stop loss. So for this one right here, I took half stop loss just to be safe. But even if I did lose the trade, it would be a 4% loss, or a slightly over 4%. You can lose 5% for your challenges, or not your challenges, but challenges, verification, funded, same thing as 5%. So I only lost 2% off this one right here. Here's my trade from today. I lost 2% right here. If I lost another 5,000, that would have been, or actually, no, you're right. This, or am I? I'm tripping. Let me see what But basically what I did here is I used a half stop loss. So short answer to your question is I didn't use a full stop loss. I wanted to be on the safer side where I wouldn't be too close to like say if I got spiked out or something. I didn't want it to like hit, like go past it and then hit my daily loss. But let me just, sorry, my math sucks. 200,000 times 5%. Yeah, no, you're right. Yeah, if I went for the full, so I was risking actually 2.5%. Sorry, I thought it was 2%. I forgot I changed my lot size to 10. Before I was using 8 lots. Now I was using 10 because I'm just letting them run. But yeah, if I was to take another one, I would have lost the funded account. But for this one, I used a smaller stop loss, basically half of it. So I was risking about, instead of 5,000, I was risking 2,500 for this trade to pretty much cover my loss here. And that's the reason why I moved my stop loss and profit as well. Typically, I wouldn't move my stop loss and profit, but since I wanted to be safer, when price pushed up right here, that's why I moved it in profit, just to pretty much guarantee profits. And that's literally what happened over here. You know, I just guaranteed 650. So it's better than nothing. It didn't cover the entire loss, but it did cover some of it. So yeah, sorry, my math sucks, but yeah, you're right, John. If I used the full TP stop loss, it would have triggered my max daily loss, but that's why I used half of it to be safe. And that's why I also moved my stop loss and profit to pretty much guarantee profits and have the opportunity to catch the full move. Here we go. As price starts to retrace, this is what I was mentioning earlier, guys. Don't chase the move because it's pushed up too high. It was due for some retracement right here on the one. So you can see price is pushed up from the bottom right here to this high, about 2,960 pips. Here comes a retracement. Price is now rejecting off the sessions. One of two things will happen at this point. It's at a strong structure. This is the Asia high from yesterday. Price will either bounce off it or it'll break below and continue testing next levels right here. So just a couple things to look at right there. Let me go look at the sentiment real quick. Sentiment is still 63% short. So I do expect the bounce to happen at some point. So right here, if price doesn't bounce right there, it might just continue dropping lower. And then the next area to look for would be news price and these sessions below here. But one thing to keep in mind is that it is NFP week. So you might see price just kind of bounce around before it corrects back to the upside. But I think overall price will be bullish for this week. So if you were to measure Monday till Friday, I think it's going to be bullish. Let me see if there's any other news here. Nothing else for today. Tomorrow we have JOLTS job openings at 7. We have manufacturers Canada. So basically JOLTS job openings on Tuesday at 7 a.m. and then awards total vehicle sales. But for the most part, I think JOLTS job opening is going to be the main one. This is going to indicate how many jobs are available right now. This is going to be a key indicator as to whether we're in a recession or not. You know, Powell said we're not in a recession. Everyone else says we're in a recession. I'm pretty sure we're in a recession. This is going to indicate, though, or it's going to give you, hard data whether we are in a recession or not, because this is going to show how many jobs are available. Last month, it was 11.25 million. This month, they're forecasting it to be 10.99 million. So basically 1 million less jobs. This could be even lower, actually, though. So we'll see how this affects the market tomorrow. And then we'll see how the price reacts to it as well. So Tuesday, we have JOLTS job openings. Wednesday, we have ISM ISM services PMI, final services PMI, factory orders, crude oil inventories. And that's about it for Wednesday. Thursday, we have unemployment claims. This is going to go hand in hand with the JOLTS job openings. Trade balance, the Fed's going to be speaking, natural gas storage. So it looks like the news start to pick up on Wednesday. So Wednesday, we start to have a lot of high impact news, ISM services, or actually it's Tuesday. So we have high impact news every day. JOLTS, ISM services, the Fed is speaking on Thursday, and then Friday is going to be the most riskiest day. We have unemployment rate, and then we have NFP. So yeah, I mean, we got a lot of stuff ahead of us. This is going to be it could be beneficial or it could be risky for us, but I think it's going to help us out because it's going to cause volatility in the market. It'll have us it'll provide the volatility we need for the breakout. So we're not holding on to that trade for like 20, 30 minutes. So there we go. As price bounces. I wouldn't recommend just chasing this right here though, guys. Don't just chase it because you see the bounce. Like chase it only if you see some sort of entry that makes it valid. There was a V3 right here. So you can see the low here is a red candle followed by a green candle pending momentum. So there was a V3 right here if anyone took it for the scalps, but not one that I would necessarily recommend you guys just hop into for whatever reason, right? Only take it if there's some sort of strategy that you're applying that lines up with this entry here. So let me scroll down a little bit lower and see where else I'm missing. Yeah, Patrick said happens all the time. I've lost challenges, verifications, and even funded accounts just have to bounce back and stay consistent. And I agree too, Patrick, 100%. Let's see. Deswell said just started my MFF today, down 4.5%. Not worried about the breakout. Not worried about K2 will bounce back. Yeah, no, it definitely does well. Same with yours there too. Yeah, Kip said I'd take the daily after it signals and retraces, which is what I was referring to as well earlier too. Where's it at? So there was no daily here yet, but if the daily does come up, I would wait for it to retrace. This provides a better entry point, Karen, because I think you were asking about this earlier, right? This provides a better entry point because here's a retracement that I was talking about earlier. Price has to retrace. It's pushed up too high. This established this high, so price is now retracing. This is a better opportunity to make the entry because as price drops back below, it'll give you more room here to take that daily, right? So like say, for example, price swings down here. It establishes two lows here, basically a higher high. And then when it provides the buy entry for the daily over here, you're going to have pretty much all the opportunity to hit your TP without having to break, a new high here, or maybe just slightly above it. So there's no daily yet for this, guys. If you guys are not familiar with the 10-minute daily strategy, this was a strategy that we used to apply a lot last year. It's just a once-a-day strategy, basically looking for the first momentum signal after open, and you'd pretty much just ride this to the full TP. The cutoff for this is going to be 9:30 though, so if it doesn't come up by 9:30, I would just skip it. I'm not going to take the trade myself because, as I mentioned, I'm only taking the breakout, 1 minute daily counter trend and 3 minute daily counter trend. But if it does come up, I'll follow with you guys and we'll see where it goes. For this one here, though, I do recommend you move your stop loss in profit. This is a bigger move. It's 1,500 pip move. It's not our typical 500 pips, so better to be safe than sorry here on NFP week. So let me scroll down a little further. Yeah, Kip said when it's this big, it usually retraces at least 50%. Yeah, which I agree to, Kip. Better be safe than sorry. Yeah, no, definitely. And Pat over here also mentioned, and again, it printed that lower low, indicating the push up. So yeah, exactly right here. This lower low here is with the green candle, right? So this is a reversal pattern. It's for one, it's a V1 as well. It's a double body right there. The lower low over here is with the green candle. So we see this push right here. As it pushed up, it's looking for the retracement. And I think when it swings back up, it's going to pretty much just continue its move back to the upside. Looking over here at the fundamentals are, I mean, they're pretty flat right now. They're not 100 points in the red or 100 points in the green. They're kind of just around the middle point. This will easily shift. Right now, it's getting close to the 100 points in the red, but as price swings back up, it's going to go back to below 100 points. So the fundamentals here aren't very strong. The main thing I'd look for the bias would be the sentiment over here. Sentiment 63% short, so I do think it's going to swing back up. It's just a matter of time before it does. Let's see, Kip said, so daily could actually be a sell. Yeah, Kip said, all right, I'm out. Too much movement that I don't like, and I got patience in 15 minutes. Hasta luego. Yeah, Kip, we'll see you tomorrow. Nice. Jason took the trade earlier too. He made over 1,500 bucks. Nice, Jason, with that recovery there. Peter just posted the CNBC article. It says 61% of Americans are now living paycheck to paycheck after inflation spike. Yeah, no, it's crazy, man. Inflation is nuts. And that's why trading is like, I feel an inflation peg of itself, right? So the thing with trading is that you can trade both ways. You don't have to just invest in one direction. So like even if inflation is going up, and the market's going down, you're not really getting affected by it because we take trades in both directions. So yeah, I mean, this is probably the best time, if not one of the best opportunities for you guys to get good at trading, so that like when we do go into a depression or inflation just continues to increase, you're just basically owning your skills here for your ability to pretty much hedge against inflation, because inflation's going to go up. There's no denying it. Same with the recession. Recession's not going to stop. The only way to fight recession and inflation is to make more money, right? So what better way to do it than get better at trading, so that when the market does become better and it's become smooth again, the market is going to get smooth again, guys. So just keep that in mind. We're still in summer. It's August 1st. The summer season is typically choppy like this. So once we hit like September, October, the market's going to start moving smooth again, and we're going to be able to lock in like a lot more profits, like a lot easier. So if you look back at, I don't know if we have last year's results here. No, we don't. So let me just go over here real quick. So like let's see, December 31st. So looking at the trades from, okay, so this is last year, right? Looking at last year, you guys can see that during the summer it kind of slowed down a little bit. So like July over here slowed down a little bit, August slowed down a little bit, but it started to pick back up like September, October, November there was holidays, December there was holidays. So these are going to be outliers, but looking at September and October, it starts to pick up again. So just keep that in mind, guys. It's going to be choppy from like probably the beginning of this month, and then it'll start to pick up late August, and then September, October, November, it's going to pick back up. If you guys are new to trading, you guys are probably not familiar with like how the seasons change, but typically the summer is like the worst time to trade, which is when we're trading right now. That's why we have like a lot of rocky trades right now, because the market is kind of it's kind of slow. The volatility is not there unless like we have a heavy news week like this week, which is NFP. Let's see. Maria said back to opening price done. Let me check. Yeah, I didn't even mark up opening price. So let me see where Maria identified that. I thought I marked it earlier, but I guess I didn't. So opening price is where it was right here, 630. And opening price for London was, I mean, it's even lower, it looks like. So this is gonna be open price for London Open. And then going to this over here, this is US Open or New York Open. So looking at the breakout earlier over here too, it was really close to the London Open. So this was a breakout that we kind of caught up with earlier. It was pretty close to the London Open right here. It was about, yeah, it was only about 250 pips. So that's like another structure that we probably would have been a bit careful around. But for the breakout, it's really hard to use these red flags and confluences because the volatility is so high that it'll break right through them. But yeah, looks like price was attempting to make its way back to opening price over here. It did make its way to opening price for London, not to New York though. New York is like way down here. But now looking at current price, it's just ranging. So what I'm going to do here is I'm going to go on these other time frames. I'm going to mark up the high lows to see if there's other areas of liquidity for you guys who are still scalping. And if you guys aren't scalping, it's fine. This is still stuff that you guys should probably be aware of so that you kind of know where to look when price reaches these price points. Because if you do have areas of liquidity, it's going to help with your ability to feel confident about your trade. Because it's pretty much just going to give it that boost that you need if you're getting close to your TP or you're getting close to your stop loss. You'll have an understanding as to like where price is likely to push. Nothing there. 10-minute. 5-minute. So these high lows and liquid areas of liquidity, they're still important. I just don't draw them up because they're not relevant to the breakout in the daily. I mean, they're useful, but they're not necessarily required. But this will help you guys identify market structure if you're not able to see, you know, whether price is ranging or not. So like looking at this right here, the main reason I drew this was to show you guys that price is literally just ranging. You know, if I turn everything else off here, I got to turn off that alert. And I got so many alerts here. I'll turn it off. Let's delete these real quick. These are just the other trades we took in the past. Never mind, this is going to take too long. I already turned that one off. But basically what I was trying to show you guys here is that price is just ranging. So here is the high. And here's low. I was able to identify this drawing the high lows right there. So if you guys have trouble identifying structure, I mean, you guys can just draw the high lows. You guys can see. So this is the smaller range, and you can see the big range is actually right here because market opened here at 630. This is going to be the big range. So if you're looking for the total range, this is the total range for today. This is the low, and this is the high for the day for New York. If you want to go for the medium range, you guys can see that this kind of tightened up a little bit right here. So that's the full range. This is the medium range. And this is the current range. So price is just ranging right here. The range just gets tighter and tighter, right? It's the big range, medium range, small range right here, or I guess regular range right here. Now that price is ranging, there's a couple things that you want to look out for. You want to see price squeeze. So, I mean, you can see it's already happening right here. You want to see price squeeze in the range to get tighter. Once the range gets tighter, this is going to help you identify the breakout with the direction. So like, for example, price just starts to get tighter right here. The next thing that will happen is price will break out to the upside. You want to see it retest and confirm, and this is going to be your direction. Vice versa, if price pushes the other way, you're going to look for the same pattern, but in the opposite direction. And this will confirm that it's going to continue dropping, right? So this is the key areas that you're looking for. You're either looking for it to break above, retest, and continuation, or the opposite direction, break below, retest, and continuation here. You can see prices pushing up right here. We'll see if it actually confirms this pattern that I drew right here. If this happens, it's typically going to keep pushing up in that direction. So let me just turn everything else back on here. Sessions. You guys can see it gets kind of messy. That's why I like taking it off to show you guys examples, because it'll help you guys actually see things better. If this ends up pushing above and doesn't actually close, it's just going to push the range at a little bit higher. So this range right here is no longer useful. Let's see, message from Charles. So a couple of profits over here from you guys. Let's see, Kevin over here as well. Kevin locked in a total profit of 25,000 for the day. Nice work, Kevin. He took a couple, there's one loss right here, but he took a couple trades over here from this morning. Nice consistency right there. Kevin Frazier over here, nice recovery with this trade over here, Frazier. So Frazier took a trade here. He had a loss and then he made it right back here. Small loss for the day, but pretty much recovered it for the most part. So Nice work, Frazier. Ross over here currently up 9,800. Nice work with letting your trades run. Ross, looks like you pretty much just let them all run to where they needed to go. No trailing stops for you today. I don't see any red strips here. So you pretty much let them run and then you close them out when they needed to be. So solid work right there, Ross. Kevin over here now currently up 29. Nice work, Kevin. He caught that move down right there. Next up, Patrick over here. Patrick said done and done for the day. So Patrick over here took the couple trades. Looks like he took the sell as it swung back down. Total profit of 12,648. Nice work, Patrick. Let's see any other trades here. Charles over here as well. Charles's first account. So Charles did take the breakout over here, but he closed out early, or he entered late actually. Total profit of 594. Nice work, Charles. And then his second trade over here locked in a total profit of 849. So this one he took at 734. Let's see what trade did Charles take. 734, which was right here. I'm trying to see what Charles took at that point. Let's see. I don't know which one you took, Charles. I don't know if you just like entered that late right here. Maybe you entered the trade late. Or maybe you just caught the rejection off here. Looks like you probably caught the rejection off the sessions and you try to catch it for a quick little push. So rejection right there off the sessions. Your entry was at 734. You took it for about 100 pips. Okay, yeah. Now it looks like you just caught the rejection off the sessions right here. And then you just pretty much caught as it pushed up. So you took it for a quick little push of 100 pips. Yeah. So this is just a little speculative trade that Charles took. He basically saw the momentum here pushing up. He saw price come down, rejected off the Asia high over here, this purple dotted line, and he caught it for a quick 100 pips. This isn't an actual strategy that I teach you guys, but you know, if you guys see any of these patterns here that you guys like to apply, you guys are more than welcome to use whatever indicators we have to help with your analysis. So bias here is bullish. There was a bullish momentum, rejection off this point, solid entry. Even though it's not an official strategy, if you guys know something that works well for you, you know, go ahead and use it. All right, so here's my markup from earlier. We had price break above. Let's see if it continues pushing up. One thing that you would want to look for is the retracement and retest. So basically push to the upside, retracement, retest, and continuation. That's kind of what you guys are looking for here. To have that confirmation that price is going to push up. But we do expect it to push up. Let me go back to the 10. All right, so that daily here is still coming up, guys. I'm not going to take the trade, but I'll mark it up for you guys if you guys want to take the daily. It's just getting too close to 8. I typically don't like taking trades after 8. I think this will hit eventually, but I think it's going to be a slow climb. I don't think it's going to hit right away. You might even get some pullback before it actually plays out. Maddie says he's been testing the SR zones, two wins and 0 losses for today's variations off. Nice. All right, cool. Yeah, so another confluence that that Maddie's basically looking at is he's using the K2SR. You know, as I mentioned last week, like I created all these indicators for a reason, right? They're not here for like random stuff. They're meant to be used for a confirmation or confluence. So I'll just use this clean chart over here. And I'll draw up the K2SR. So I'm going to draw this zone down here so that you guys can see what Maddie was looking at. Let me draw this K2SR zone. Okay, so basically the way that Maddie uses this and the way that I use it myself sometimes is I use this as an extra confluence. Let me turn on the momentum indicator. This is going to be a clear example of a V3 that could have been taken and using the SR as a confluence, right? So like right here, we have a V3. There's a low with a red candle, it's followed by a green candle. There's a pending momentum for a buy. So this would technically be a V3 variation. I think the stop loss would be too small. So if you just wanted to use a fixed 300 pip stop loss, TP, you can do that. This is typically what I've been using if I do apply it, because a lot of the times if the candles are going to be too small during the summer, it's going to be impossible to find V3. So you can use a fixed TP stop loss. But this is what Maddie was using as his confluence. We had the SR right here using the K2 SR version 2 indicator. So we already had the rejection zone. There's a V3 here, everything lines up. This is like the final confluence. You have the rejection off this point on the 1 minute. And this would indicate that, okay, price is probably going to bounce off it and continue pushing up. So that's why Maddie identified this as a solid V3. And then if you would have taken the trade there, full TP right there, right? So if you guys are wondering, I mean, you know, we're always looking for for new solutions to make the trade strategies better. And obviously the more confluences, the better. So if you guys want to use, like literally every indicator here for K2 is used for something. And if there's anything that you want me to cover in specific, you know, just let me know. We are having the mentoring session later today at 2 p.m. On our normal schedule. So if you guys have any questions, you want me to cover this in detail, just let me know. I think I'll just go over every indicator, and I'll do this myself just to show you guys how everything works and how you guys can use everything in conjunction with each other. So let me just make sure all the indicators are on here right now. Pivots, high, low, sessions, momentum, K2SR V2, K2SR V1, sessions is already up, pivots is already up, high, low is there. That's about it. So let me see if there's any other questions here. So there's no other questions. I'll just go over this real quick so that if you guys want to see how every indicator does, it'll help you guys understand how everything can be used in conjunction. So I'll just go over the indicator list one by one real quick. Let me turn everything off right here. Okay, so we'll start off with the trend meter. The trend meter is going to be down here on the bottom. Basically, the trend meter indicates what the trend is, right? So when it's red down here, it means that it's in a downtrend. So if you have that right there, you can already identify that price is going to be dropping, right? Obviously, you can see that that price drops. When it turns green, that means that price is bullish. So you can use this to confirm the trend. That's, you know, the basic use of the trend meter right here. If it's blue, this means that price is just consolidating or ranging. So if you're a breakout trader, if you just want to look for breakouts, you can pretty much just wait for this to turn blue right here. You can identify the range. And then when it breaks out outside of it, that's where you can take your buy. Or if it breaks out below it, you know, you can take your sell. So that's one use of the trend meter. The other indicator here would be the K2 pivots. Basically, this is used for the same thing. You know, there's obviously multiple pivots there, but this is used for the same thing. You can use this to identify the trend, or you can use it to identify rejection points. So you can see price comes down, it hits the pivot, it bounces off. Price comes down, hits the pivot, bounces off, right? So this is used for two different things. It's used to identify rejection points and or trend. So that's another use for that there. Going over here real quick to the high low. What this does is this automatically plots the high lows on the chart for you. So, you know, a lot of you guys have trouble identifying high lows. This will pretty much take out the guesswork, and it'll allow you to identify high low points. That's one point. That's one way to do it. Another way to use this indicator is to identify liquidity, right? To identify liquidity, you basically want to mark up all the high lows. And then when you have high lows that are bunched up together, like in one area, this will indicate liquidity, right? And the reason why it indicates liquidity is because when people are taking sells right here, so say for example, people are entering sells at this point, right? And this is why all these indicators are useful to each other. You can see people are entering sells at this point. whenever people enter sell entries, where do people typically place their stop loss, right? If you followed anybody who taught you how to trade, you followed any course, or I mean, this is like, it's like this is basic trading stuff, right? When you enter a sell, where do people typically place their stop loss? If they enter a sell right here, the stop loss is going to be at the previous swing, right? So if you have the swings already here marked up, you can see that stop loss is going to be placed around here. Stop loss is going to be placed around here, here, and here, right? So what does that tell you? If the stop losses are placed right there, when price reaches this point, what's going to happen? A stop loss hunt. It's going to trigger everyone's stop losses, and it's going to push up from there, right? So with that said, we're pretty much identifying where price is going to push. So you can see price pushes below here. And then when it finally makes its way back to that area right here, that's where the stop loss happens. Stop loss hunt happens. Pretty much triggers everyone's stop loss, and then it pushes up to the next level, to that point right there. So that's one way of using this indicator, or two ways of using that indicator. The other indicator is the session's high-low. This identifies rejection points. You can see price comes down, test it. It just creates structure for you. This is the Asia high. Price breaks below it, drops lower, comes back, tests the London high, Asia high. And you can see this is where price starts to choose its direction. Whenever price breaks below structure, it drops. If it bounces off structure, it just rejects off it, drops lower, etc. And that's how these sessions is used. Looking at the K2 momentum, this indicates where the direction momentum is going. So when you have a sell momentum right there, you can see price pushes down. This should be used in conjunction with the trend meter or the pivots. So if you take pretty much trades in the direction of the trend, like for example right here, sell signal, trend meter is red, it's below the pivots, continued push to the downside. And that's about it. I mean, other than that, we have the K2SR. This is used to identify support and resistance. So like basically, you can see where price is currently at. When price continues to move along, this will automatically plot your support and resistance for you. So you can see price comes back up and it creates a new resistance up here, support down here. As price continues to move along, it automatically plots it for you. This will help you identify where price is likely to bounce or break through. So you can see right here, the trend meter is red. Price is coming down to this support. And you can see if price breaks below, it's probably going to continue dropping, or if it bounces off, it just continues pushing to the upside right here. You can see as price continues to move along, it creates new areas of support and resistance. So instead of having to draw your support and resistance yourself manually, which a lot of people incorrectly draw, you'll have this indicator here to do that all for you. So you don't have to actually go and draw it yourself. Because especially if you're trading on the 1 minute, it makes it difficult for you to really identify where these points are because price moves too fast, especially if you're scalping. So that's how this indicator is used. It automatically plots support and resistance on the chart. And then once you have that, you can identify if price can break above it, continue pushing, or break below it, and continue pushing in that direction as well. The last indicator here is going to be the SR version 1. This just plots the support resistance, just one line. So you only have one line for resistance and one line for support. The V2 gives you zones. So that's a difference. V1 gives you one, and you can see here as price continues to, and watch back a little bit. As price moves along, it'll automatically adjust support and resistance for you. So this is a resistance. Price is pushing along. And then you can see this is now the range, right? Because you have the support, you have the resistance right there. And then as price breaks outside of it, it automatically moves with price. So you can pretty much identify where price is going. The best part about this here is that if you guys are looking for the range, or if you guys are waiting for range, you can look for the trend meter below. The trend meter is blue down here, right? So you're pretty much just identifying the range. So now that you've had a range right here, or you have identified the range, you can anticipate the breakout, right? The range got tighter. So right here, you can see the range is pretty tight. Now what you could look for is the breakout in the other direction. If you have the momentum indicator here, this can show you where price is possibly going to go. So you have a buy signal right there. The range pushes above. Buy signal right there, pushes up. And it just continues to range above there. So there's different ways to use these indicators, but each indicator has its own use. If you want to see like what Matty uses, he uses the V2 to identify the rejection points. But you guys can use this for like whatever you guys are looking for. So if you guys already have your own strategies, you guys can use the K2 indicators to pretty much improve your strategy to identify what you need help with. Like sometimes you guys have strategies, but you guys aren't able to identify bad trades because you don't know where the rejection points are happening. If you have a problem identifying reversals and rejection points, use the high-low indicator and the K2SRs. That's going to help you identify rejection points. If you have a problem identifying entry, use the K2 momentum indicator. So this will help you identify where momentum is shifting. So if you don't know where to make your entries, use the momentum indicator. If you have trouble identifying trend, use the K2 trend meter or use the K2 pivots. Each of these indicators I've created are used for a specific reason. They're not meant to be ignored, right? Everything here falls into place. It comes full circle. So the more confluences you have, the better entry you'll be able to take. But if you guys want to keep it simple, just apply what I'm doing. Breakout 1 minute daily counter trend and 3 minute daily counter trend. But you know, you guys have these tools here. I mean, you might as well use them if you guys have them. So yeah, if there's any other questions or you guys want me to cover anything specific, just put it in the chat. Otherwise, we will be having the mentoring session later today at 2 p.m. So if you guys have any specific questions and want me to cover in detail, you know, just attend the mentoring session later and we'll be able to cover that. I'll go over the indicators again later during the mentoring session. But I think for now, there's not really much for us to take at the moment. There's nothing off the 1 minute over here. Oh, so here's the breakout from the range earlier. So price pretty much corrected back up. We already knew price was going to push up because the overall bias was bullish. And there you go, it came right back up right here. So this is why I always use the sentiment as my main catalyst to identify where my bias is going to be. We already knew price was going to be bullish today because this has been 60. When market opened, it was like 63% and it stayed above 60% for the entire day. So this is why I wouldn't have taken any sells today. And you can see exactly why price pushed up right here. Market opened here at 6:30. I'll mark up the 6:30 time. I'll go over here to the clean chart actually, so that you guys can see it a lot better. So I'll mark up opening price, which was 6:30. Unfortunately, I got screwed with that breakout, but you guys can see the direction here, right? From 6:30 to 8. Price was bullish. So if you go back and just rewind to the 6:30 when the market opened, price was bearish right here, right? But we already knew price was going to push up because we had the bias over here. We used the retail sentiment to identify what direction to be trading in. Since this right here was 62%, 63%, etc., short, this indicated that, okay, price is going to push up. So this whole time we were looking for buys. Unfortunately, when I took the breakout, I hopped in too early. We hopped in too early right here. And we got stopped out on that big red candle. However, price did push back up because we already knew price was going to push up. Price was just manipulated on open. It happens. You can't really predict that it's going to happen like that, but it happens. And then we already knew the direction right here, where it ended up pushing right back up. So it's all good. It's just a case of bad luck. You know, for trading, it's all about trade psychology, guys. You can't let something like this kind of throw you off. I feel like with a lot of people, they'll be really good for a while and then they have one loss and they think that their whole strategy is screwed up, right? And typically it's not your strategy. It's usually the market's just not giving you what you need for that day. That's why for me, I'm going to continue taking the breakout. Even though I took a loss on this, I'm not going to stop using the breakout. I'm going to keep using it because long term, from all of my testing with Matty, it works, right? We already know it works. So it has a high percent win rate. Losses are going to happen. You just got to bounce back from it on the next trade. So even though we suffer this move right here, tomorrow I'm going to do the same thing. I'm going to take the breakout, look for the 1 minute daily counter trend or the 3 minute daily counter trend. So if you guys have any questions, put them in the chat now. Otherwise, it's 8 o'clock. So it's about time for us to get off this live. But I will be back in about 6 hours for the mentoring session later today. So if you guys just want me to go and back test the breakouts, we can do that. If you want me to go and back test, or, you know, we'll just go back and look at whatever trades you guys want to look at. Also, if you guys have any strategies that you guys are applying and you guys need help improving them, you know, I'm here to help you guys out. So if you guys have anything that you need, you know, some sharpening with, I can show you which indicators you can use to make your strategy better. I mean, I can find a lot of things on the chart just by looking at it. So if you guys have a strategy that you want me to look at, just put your requirements or write down your requirements and then tell me what your problem is. Like, do you keep getting stopped out too early? Do you have bad entry? Do you get caught in reversals? Like any of those things there, I can find a solution for you, because I mean, just looking at the charts here, you can see these patterns, they play out all the time. You know, if there's anything specific, I'm here to help you guys out. I really just want you guys to be consistent and successful with trading. And that's why I've cut down my trades here to just the breakout, because I've already broke it down to a science, right? We already have the win percentage for the breakouts. We have the win percentage for the daily entries. If you guys can just focus on a few trades per day, you know, 1 to 3 trades a day, you guys can do well. So with me and Maddie, we back tested the breakout the way that we're applying it now. If you apply it every single day, you're going to have losses here and there, but you're going to have a high win rate. It's like a 60 to 70% win rate. So for a 1-to-1, that's going to play out long term with it, whether it be at the end of the week, the end of the month, the end of the year. You're going to be in profit if you just stick to that one strategy and you apply it properly. For the 3 minute and 1 minute counter trend, John provided his spreadsheet of this right here. And you can see that if you apply it with a 300 TP stop loss, it is a 74% win rate. So if you just apply the strategy as it's supposed to be done, you know, eat the losses when they happen, you're going to be profitable at the end of the week, at the end of the month. It's just being consistent. You know, don't take stupid trades. Like literally just stick to like the stuff that works, and you should be able to bounce back with no problem. So, all right, I think that's it for right now. Scotty has some profits over here. Nice work, Scotty. He locked in 5,540. So great work right there, Scotty. Kevin over here as well, locked in a total profit of 62,000. Wow, that's crazy for the whole day. He said he caught a lot of pips on those last 6 trades. So right here, he caught those buys, pretty much the pushback to the upside right here that I drew on the 1 minute. So he caught that as it broke outside, and then he pretty much just rode it back to the upside right here in the direction of the bias. So, all right, guys, if you guys have any other questions, feel free to email me or message me on Telegram. Otherwise, I'll be back in about 6 hours for the mentoring session today. So if you guys have any questions, come to the mentoring session, whether it be about the K2 strategies, whether it be about your own strategy, if you need help with the indicators, I mean, anything that you guys are confused with, right? I'm here to make sure that you guys understand everything so that you guys are well prepared for tomorrow's trading session. But for me, I'm just going to be applying the same 3 strategies I apply pretty much every session, and we're just going to keep rolling with it. So, all right, guys, have a great rest of your morning, and I'll see you guys back here in about 6 hours for the mentoring session. So I'll see you guys then.